Trade management.
All right, good morning, guys. So, all right, good morning, guys. Today is Wednesday, August 9th, and as usual, doing analysis for US 30, gold, and EU. So right now you can see US 30 is bouncing off of an hourly trend line. So I'll just take off the trend line to make the charts cleaner, but we know that US 30 right here is bouncing off of that trend line. So my bias, and I can tell that this red candle, this means that price is starting to close below the 9 EMA on the hourly. So my bias for US 30 is a sell. On gold, you can see gold, we came off of this trend line. So I'm still biased for gold for a sell until possibly 1914, which is where we have the next hourly trend line. So I'll turn off the trend lines again to make the charts cleaner. For EU, same thing. EU is rejecting off of this static trend line to the upside, and I do expect EU to come back down. For my bias to change to a buy for EU, I would have to have a closure either above, a closure and retest above this SAR region on the hourly, or closure above and retest of this trend line to the upside. So I'll also hide those trend lines for EU. So this morning I'd sent out this EU sell. So I'm still in this EU sell. It has like a 20 pip stop. So 20 pip stop loss, 40 pips TP. So that's a 1:2, risking 0.5%. So if this trade hits, again, that's a nice 1% gain. If it loses, it's just losing 0.5%. So again, that's the benefit of having like, right, at least a 1:1, if you can, a 1:2, 1:3. So I'm still in this EU sell. The reason I entered the EU sell, you can see we had closure below this 2 SAR sell areas on the hourly time frame. The next hourly candle retested and closed below those 2 SAR sell areas. So that's why I sent out that sell in the Discord. Then we had this gold sell right here. The reason I entered this gold sell, my bias, same thing. My bias for gold hasn't changed. I'm still biased for a sell on gold. Another way you can look for biases. So I mentioned using trend lines. For those of you who might not yet know or are good at drawing trend lines, you can use the SAR settings. And by that, I mean, you can either extend the lines and look for double rejections, or if you put the SAR, so for example here, right, this is just the SAR because it's part of the reversal indicator. Just follow the trend, and this is on the daily, right? So always find your bias from a higher time frame. So for example here, since this is the daily and the settings for gold, well, the daily time frame, what I would be looking for here, whether it's a green buy area or a red sell area. So for example here, when gold closed below this sell SAR region on the daily time frame, my bias would have been a sell for gold until we get a green zone where gold closes above on the daily. So if the daily is too high for you, you can do the same thing on the 4-hour. And again, you're looking at the latest. So in this instance, you don't have to extend the lines to find the bias. So in this instance, if you're using the SARs to find the biases on a higher time frame, so here, right? So I just went over how to do it on the daily. So for the 4-hour time frame, same thing. You just wait for that 4-hour closure below that red SAR sell region. And at that point, you can say your bias for gold is a sell until we get another 4-hour buy zone, and then you get 1 candle closures. So keep in mind, right, for higher time frames, you don't want to wait for those 2 candle closures because time will be so far gone. So like I would say for 4 hour and above, wait for just one candle closure. If you're using the 1 hour, maybe wait for that break and retest, because hourly candles of course move slower than will move is it slower or quicker? Will move slower, or will mostly have like a lesser move than a 4 hour candle, because a 4 hour candle has 4 1 hour candles. So you can see from the daily time frame down to the 1 hour, we are below sell SAR region. So we don't even have a buy SAR that's anywhere for the daily 4 hour and 1 hour. So this is another way, if you don't want to use trend lines like I do to find buyers, this is another way you can try and find your buyers. So for example, here, I would just be looking for sales on gold until we get a closure. So until you see what happened here, where gold closed above the buy SAR. So until we get a scenario like this, I am biased for sales. And that bias to me is supported even by my trend lines, where we're just trending to the downside on gold. So that's just a nifty little trick for you guys who may not know how to use trend lines. So for me on this trade, I sent this trade out. It had a 25 pip stop. So this was like 2,500. You can see if you didn't set break even, you would have still been in that trade. But my practice is, if a trade has achieved a 1:1, I set break even, right? No ifs, buts, or maybes. So long as you have a lot of winning trades, even if you hit stop loss and you win the next trade, you actually gain back or you're up in profit. So for me, for this trade, when the trade came down to be 25 pips in profit, I set break even, and unfortunately I got taken out at break even. So currently on gold, again, the reason I entered that, my bias was a sell. We had this break and retest, break, closure below, and then retest and closure below this sell SAR region, and that's when I entered a sell for gold. So I'm still biased for sells on gold. I want to see, give me 1 second. Let's see what we have here. I might re-enter this trade. I also wanted to look at the 4 hour time frame, because if you looked at the Discord, I mentioned to look at the 4 hour time frame. So here, if we look at the 4 hour for gold, we really don't have anything major for the 4 hour. So for this one on gold, I want to see what I want to do here. If I enter this, I really want a tight stop on gold. So this would be, that's a 30 pip stop. I want something that, because 30 pip would mean to ride this trade. So my bias is still a sell. Let me go to a lower time frame and see if I find entries there. So for US 30, I'm observing this on US 30. You can see for US 30, we literally closed on the hourly time frame. We literally closed below this double sell SAR region. So this candle is the one that's going to provide a continuation for a sell. So if this hourly candle in the next 16 minutes closes, this will be a sell on gold on the hourly time frame right here. Again, stop loss above that double SAR or above the previous high. So this would give you a that's 100 pip stop. I really don't want to be trading with 100 pip stops on gold. I want my stop loss to be about at least 30 pips,
That's
maybe
30,
50.
right? Not gold. You keep
No,
saying
this is US 30, yeah. So you see this US 30 on the hourly. I haven't gone to look at the gold entry yet, but I'm just observing this sell on US 30 right here. If this candle closes where it is, this would be a trade for US 30 for a sell. You would have to have like 100 pips stop loss. For me, I honestly, I don't want to trade with 100 pips, because for me to take a 1:2 on that, then you need a 200 pips TP. So if this hourly candle closes below this double SAR right here, my bias for US 30 I already mentioned to you guys. So, right, you can see this red candle, we are turning into, this red candle means price is closing below the 9 EMA on the hourly. So, right, my bias is a sell on US 30. Even on the daily time frame, my bias is still a sell. So for this one, if it closes below there, I want US 30 to retrace up so that I can get a tight entry. I don't feel like taking 100 pip stop on US 30. So I would hope this hourly candle to close somewhere there. And if it does, that's when I'll take the sell. But let me see if I can find a gold entry on the lower time frame. So that's the 15 minutes. So for me to take a sell on the 15 minute, I would have to wait for closure below this red SAR, retest, and then closure below. So that's going to take a little while. Let me see the 5-minute. Yeah, so 5-minute as well. 5-minute as well might take a little while. So I'll just let's see. Yeah, I'm gonna hold off on this gold entry until we get better confirmation. You know, one major thing I'm looking at here is this wicks right here. So this wicks tell you a story. They tell you we have a lot of buyers on gold in this zone. So so that's what I want US30 to do. I want US30 to retrace to the upside so that it can give me that tight entry. So for gold here, right, this wicks, I'm cautious of this wicks because it's telling me for 3 consecutive hours, we have a lot of buyers here. So for gold, I'll just wait. I would rather wait for this 15-minute entry or for the 5-minute entry. So the 5-minute entry may come faster than the 15-minute. So for gold, and you can see we also have an hourly bullish zone for gold there. So that's what's holding gold up. So for gold, I'll wait for the 5-minute entry. So I need 2 candle closures below this SAR, this current SAR, not anyone in the past, not any other SAR, this live SAR that's right there. So I need a break and retest of that region, and then I'll try to get in for 30 pips or even 20 pips, stop loss, and 60 pips TP. But I need that confirmation to first come. And then that's the only way I'll write that, because I really don't want to enter right now, because you can see every time gold gets to 1923, buyers always save it. So this entry, if we do get it, will be below 1923, and we would have like candles closing below this zone. So that's ideally what I want instead of jumping it right now. So US30, this is exactly what I want for US30, because the higher US30 comes back up, the better the stop loss it will give me. Therefore, the better the risk to reward. Also, if this current hourly candle closes above this double sell zone, I am not taking it, because again, that will be an invalid trade, because for my strategy, I don't wait for one candle. I need 2 candles closing above or below a region. So I'll just wait for US30 there. On the 4-hour time frame, we have 2. So we have a double SAR on the 4-hour right here where price currently is. We also have a double SAR for a buy right here. So this is the one I just sent in the trade ideas before the live session, and I said, if this 4-hour candle that closed at 9 a.m., which is about 40 minutes ago, if it had closed above this double SAR, I was looking to buy US30. So this is what I mean by waiting for that validation. So if this candle had closed above, I would have bought US30. But you can see this 4-hour candle closed below this, because the previous 4-hour candle had broken above that double SAR buy region. So what we always need, we always want the second candle to close above it. So it can retest and close above, or at the very least, even though it doesn't retest, we need it to close above. So you can see that retest candle or that entry candle broke below that SAR buy region, and it closed below it. So that trade, that buy, of course, was invalidated. So this is the one I'm talking about right here, right? And that's why I put in possible break, retest, and closure. And then I, sent out an update that that was invalidated. So you can see here on the 4-hour time frame, if this 4-hour, we also have a double SAR sell region for US30. So for us to even think of taking this 4-hour entry, I know we have a 1-hour entry, but if you're looking to take the 4-hour entry, you'd need this 4-hour candle to close below. Then you'd need the next 4-hour candle to retest and close below, or just to ideally close below for you to enter that, which is to mean if you're looking to trade this double SAR on the 4-hour, and EU is coming back down. So if anybody wants to scale in, so for EU, this hourly candle, I would love this hourly candle to close below this SARs, because it's closing below 1, 2, 3 SARs. So I'm still holding my EU sell. And there goes gold. Let me see, we get an entry on the 5-minute. So this current 5-minute candle, so we already have that break of that sell SAR on the 5-minute. I need this current 5-minute candle to close below, or at the very least to retest and close below. So ideally, so same thing right here. So if we get this entry, this is a nice trade. So this would give me maybe like a 25 pip stop, which is good. And a 50 pip TP if I want to do a 1:2. So let's see, we have 4 minutes till that candle closes, but that's the buy, I'm sorry, the sell that I want to take on gold. Where was I? Yeah, so let's wait for gold for those 5 minutes. Yeah, so for US30, for you to take this 4-hour SAR double sell, you would have to wait for 7 hours, and 7 hours is what, 4 p.m. today, which is ideally a time we do not trade. But luckily the 1 hour is giving you an entry right now in the next 8 minutes. So, right, it's up to you to see which one you want to take. So for me, I'll take gold. I know last time when we had an option of taking gold or US30, we took gold and unfortunately we lost 0.5%. But anyway, the key thing is just to and again, the other best thing about it, both of them are sells, and ideally, for the most part, they both move the same. So it's not like one is a buy and the other one is a sell. So both of them. So I'll do this for US30, but for me, I'll be taking gold and not US30. So this entry comes in the next 7 minutes. Keep in mind, you need this hourly candle to close below here. You need your stop loss either above this or above this. Ideally, I would say like a 50 pip stop is good enough for US30. And then you have 100 pip TP. So that's the trade for US30. All right, let me see if this gold trade will activate. And gold is dropping, so I need in the next 2 minutes. Right there. So for a tighter stop, right, keep in mind your stop is either above the SAR or above the previous high-low period. At the very least, right, at the very least, if in doubt, have a 30 pip TP. If in doubt where the SAR is, if in doubt where the high-low is, put a 30 pip stop loss. But for me, I'll be using a 25 pip stop loss. And for this trade, I'll be risking 0.5%, meaning if this trade wins, I'll make 1%. And hopefully the EU trade hits as well. That would be another 1%. For this gold, you know, I don't know if anybody entered when I sent it in the Discord, but you would have been out at break even. If you didn't set break even, you'd still be in the trade and you'd be at a 1:1. So it's up to you whether you guys want to set break even or not. There's pros and cons to each. So the pro is if a trade, if a strategy is very profitable, even if you don't set break even, like for this one, even if you don't set break even at a 1:1, if the strategy has a high win rate, even though you hit stop loss and then you hit TP on the next trade, like full TP without even setting break even, you'll be up in profit. If you have 2 back-to-back losses, and then you hit one trade that hits full TP, you end up at break even. So that's the best thing about, right, having at least a 1:1 or at best 1:2 and above. But the key thing is to always have to make sure your strategy has a high win rate, because if your strategy has a terrible win rate and you have like 10 back-to-back losses, or you over leverage, that's the other part, right? People over leveraging or FOMOing, because if you lose a trade and you're like, oh my god, if I hadn't set break even, or if I set break even, I wouldn't have lost that trade, and then you find somebody jumping back in with a bigger lot size. So always trust your trade, always trust your risk, and just let whatever happens happen. So 4 seconds. So I forgot to set my chart. I will take this trade. Let me see if I can set. So that trade is valid. 25 pips. And I am in that trade right now. So 25 pips TP. I'm sorry, 25 pips stop loss, 50 pips TP for that trade with a 0.5% risk. And you can see gold, right, is trending to the downside. So I'm trading in the direction of bias. if 25 pips, so I still do expect gold to drop. If 25 pips is tight for you, right, just adjust that to whatever works for you. But for me, I'm currently in that trade, and we'll just let it play out. Let's see, so it's gold US 30. We have 4 more minutes. Yeah, for me to enter this trade, I'm not gonna take the US 30 trade. It's fine if it leaves without me. Let's see, what else do we have here? All right, so we'll just observe this current gold trade. So the TP is around 1917.4 or 0.5, 1917.5. So somewhere around here. So that's fine. Let me know if you guys have any questions. So gold is dipping down. So, I want this hourly candle. If this hourly candle closes below this, because this is the last area sellers rescued gold, right? This last area. So in the next 2 minutes, I need this hourly candle to close below here, because if we close below here, we should have an impulse to the downside. So we don't want any sort of retracement at this region, because around this region is the last time the buyers jumped in to sell to save gold. So we need this hourly candle in the next 2 minutes to close below this region. So I'll just put a line here. So we need the hourly candle to close below there for a nice continuation and drop. All right, so you can see that buying momentum, right? This is what I don't want to see as price keeps for the next 40 seconds. I don't want to see this hourly. So if we get an hourly closure above here, so my bias is still valid for a sell, but right, it's telling us we have a bunch of buyers here. So in the next 30 seconds, I want to see a spike down in gold. If I do not, this trade might be a trade that we need to cut loose. But since it's 0.5%, for me, I'll still hold it because I still expect gold to come back down. So the only issue I'm wary of is like manipulation, right? And that's the issue with having like tight stop losses, because I know, like for me, I used to trade 100 pips stop on gold, and that saved me a lot with manipulation. But right, a 25 pip stop might not be enough to save you. So let's see where they closed it. You can see they closed it above. So again, we just need a nice push below here. For US 30, I'm not entering the trade, but this would be the entry for US 30 right there. But for me, I'm not in that trade. So if anybody again wants to enter to get in US 30, that would be the entry. So the reason I'm not entering, ideally, all of this are correlated. Most of the times they move in the same direction. Not every time, but most of the times. So it's like me, it's like how I don't enter, unless it was early today that I'd split my risk between gold and EU. Most of the times I'm not gonna enter like a gold buy and EU buy or a gold sell and EU sell. If I do enter it, I'm aware that I can lose both trades if both of them go against me and I end up losing like 1% or something. So I would rather just stick to one instead of shooting up for both. Yep, and look at that pump up for US 30. So this is what I'm talking about, the wicks. So every time you see wicks, right, just think of it telling you a story. So if the wicks are happening on a red candle, so just realize that it's buyers that, that region has a lot of demand. So a lot of buying pressure. So that was the same idea right here for gold. We had a lot of buying pressure in the last 3 hours, which is why I also put that line right there. So, right, always look at wicks as well. They always tell a story. Gold is pushing back up as well. So I'm still in this trade. I'm only risking 0.5%, so that is fine with me. Let's see what the 15-minute had. So if this trade gets wicked out and I see that as stop hunting, I will look for the same entry on the 15-minute. So I'm 80% sure that gold is going down to like 1900. It's just a question of when does that happen. So if I get faked out or wicked out of this trade, I will be looking at the same zone. So this aligns with what I drew, 1922.4, which is the same region as about here where I drew this. And I think I'm out of that trade, or I'm about to be stopped out of that trade. So I'm still in, but I might just get stopped out. So for this, yeah, I just got stopped out of gold. So for gold, same thing. I need to see the price action right here. So around 1922.4 on the 15-minute, I'll be looking for the same thing. So the only time I'll change my bias to a buy for gold is if we get this, is if we get closure above this trend line to the upside and retest and closure above. So that's one instance that I can change my bias for gold. The other instance is if we get a buy SAR. So for example, right here on the hourly, we don't have any live, and by live, I mean current buy SAR area. The last one was, right, it wasn't generated by a candle that's around where price is. So I would need, let me replay this. And this is on the hourly time frame. So you'll see like how these live lines show up. So you can see this, right? Live line showed up exactly when that candle was playing out. So what I would need on the hourly time frame for gold to create a buy SAR on the hourly and then to retest and close above. That's one of the times that I would change my bias to a buy. Same thing on the 4-hour. Same thing on the daily time frame. The daily time frame is a bit higher. So until that happens, I am still biased towards sells on gold. But at this point, since I've already gotten wicked out of this, and this is just a 0.5% loss, I'll just wait and see if I can get an entry on the 15 minute time frame. So for this one, that's just, so that's minus 0.5% right there. And I think this EU trade might just get wicked out as well. We'll see. So you can see, this is what I'm talking about, this manipulation right here. So EU, I'm still in. Gold, just got stopped out. US 30 is back there. Yeah, so I'm not going to take US 30 even. So for me, I'll just wait on the 15-minute for gold. And I'm not going to hop in anything else for now. I would rather wait for those higher time frame entries. So for gold, I'm still we'll still wait on gold right here on the 15-minute time frame, and then I will go ahead and re-enter. So this is the trade I would be looking for right here for gold. All right, let me know if you guys have any questions. But you can see the effect of having tight stop losses. You can easily get wicked out before the trade getting or going in a certain direction. Also, yesterday, I know I did mention that, right, this double regions are easy regions to scalp in. So for you guys who love scalping, right, yesterday I did mention that, or even the day before, these are zones you can get in with high lot sizes and go for low moves. So I had tried this like last week, but honestly, every time I scalp, I always find myself over leveraging. So I was going with 100 lots, and yes, I used to, there in one day, like last week, I made like 10K, but it was just too much stress on me. But this, especially if it's in your bias, these regions are regions that you can scale in or get in for another entry or bigger entry, and then just ride for a quick 10 or 20 pips. Let me see something for US 30. So there goes those buyers that keep pushing gold back up. All right, this one for US 30. Yeah, honestly, I'm not gonna, it is a valid trade, but I just don't feel like taking another loss. As much as it's a 0.5% loss, I just don't feel like taking it. Let me know if you guys have any questions regarding anything. Again, today we just chose the asset that just wicked us out. US 30 would have almost gotten stopped out, but it would have came back in profit. But anyway, right? It's all about which asset you prefer. But let me know if you guys have any questions regarding any of these assets. So gold, for me, gold is still a sell until we get any of those events I just showed you. Gold is still a sell. And right, that's just one of those issues about having tight stop losses with a trade.
Bro.
Mhm.
Yeah. So, so the SAR, the line, yeah. On the you look on the you meant to look at it on the hourly, right? When you said the two candle closures, you look at the when the line shows up, the SAR line, you wait for the first candle. You look at that one to close, and then the retest, the one that retests, you wait for that one, right?
Yes. So
Okay.
for
So
example, right here for US 30, we had this closure below, that was candle number one. The next candle, so keep in mind, so maybe I'm not going to be using the word retest because you don't always have a retest. So here, this candle did not retest, but it closed below. So maybe I'll just be saying two candle closures above or below. Maybe that's easier because not every time will you get a retest candle.
Oh yeah. So which one was it? The second one.
Yeah. So you see, you see how we have these two double sell SARs.
Yeah.
So here actually there was two entries. So this if a sell, okay, let me rethink this. So how can you take a sell? So number one, you can have a break and closure. I'll just be calling it how do I call it? Two breaks and closures, maybe. So breaks
Yeah.
and closures. So that's if a sell is to the downside. If a sell is to the upside, you have a retest and rejection. So here, this was another sell on US 30. The reason this was a sell on US 30 is because you had a candle that retested exactly those double SARs right there.
Yeah.
And then you had the next candle. Yes, it did not retest quite, but it closed below. So this was also, so you can see the two variations for a sell. The first one is when a sell shows up on the ups, above, right? Again,
Yeah.
the logic is still the same. You need two candles closing below. And here you have a sell that showed up below because this is that SAR region we are trading. So you have that entry right there. So this is a break and closure below. This is a retest and closure below. So those are the same variations. So whether it's on US 30, whether it's on gold, whether it's on EU, it's the same idea.
The thing is though, the green lines in the middle
Mm-hmm.
that are showing up. Yeah, just up there. Uh,
Yeah.
yeah, those two. Yeah. Why are they showing up?
Well, keep in mind, right? What's the how do I put it? What's the strategy? What does the strategy say? So strategy says always have a
Yeah.
bias. So
Yeah.
if you don't have a bias, you'll be confused by why there are green lines, where there are red lines. So always have a
Um,
bias. So for me, what's my bias for gold? My bias for gold is a sell. What's my
yeah.
bias for US 30? My bias for US 30 is a sell. So knowing that, I'm not cautious. So I don't care about the green lines,
Oh yeah, yeah. I get
because
it.
I'm only
Yeah.
looking for the red lines. So I don't, right? I'm not looking at the green lines. So that's the importance of having a bias.
Yeah.
Now, if I was looking for buys, right, there's a bunch of entries right here for buys. Right here, US 30, this was a buy on the hourly time frame right here. If I was looking for buys, if my bias was a buy, this was a buy right here, because I had a candle that closed above, and then the next candle also closed above. So I'm not going to use the term retest anymore. So this was a buy on US 30. Another buy right here. If I was looking for buys around when US 30 was here, I would have waited for this candle to close above and the next candle to also do what? Close above, and I would have entered a buy for US 30 there as well. So, right, it just depends on what is your bias. If your bias is for buys, stick to the green lines. If your bias is for sells, stick to the red lines.
Because another thing is, when you come to the 15 minute, like if you go to the 15 minute chart, how would you yeah, the thing is on the 15 minute sometimes there's a lot more candles, so it's a bit confusing.
Yeah, so which is why
Yeah.
you never see me extend. So this is the hourly time frame or the 4 hour. On the 15 minute,
Yeah.
which is this, and on the 5 minute, you'll never see me extend the parabolic SAR lines. So
Oh
on the
yeah.
15 minute and the 5 minute, I'm only interested in the current live SAR line. I'm not interested in the last 10 or 20 or whatnot. So that is a difference. Because right here, if I went ahead and extended the lines here, and let me even turn off the markups, if I went ahead and extended this lines right here to the maximum, which is 500, you will see just a lot of noise. You'll see a bunch of doubles, a bunch of,
Oh,
singles. So this is not, I only want this on the hourly and the 4 hour, because on that chart, that is all I have that chart for. I don't have that chart for any other indicator. So on a smaller time frame, which is why, right, your entry ideally should come in a smaller time frame. And in a smaller time frame, you just need that live line, because you've already, right, the higher
yeah.
time frame has already given you it's time to sell, it's time to buy. A smaller time frame will just give you a better entry, right? Because it's the same thing from a higher time frame, but you might get a more precise entry. So that's why for me, I mean, I'm not saying you guys should not extend on lower time frames. Again, right, do what
Yeah.
works. But for me personally, on lower time frames, I just trade the current SAR line.
Okay. And the other thing is, Bitcoin. You actually do you trade that? Or
No. If I traded it, it would be the same logic as this. So for example, here, if I load Bitcoin on this chart, But for me to trade, so for example, to trade Bitcoin, let me show you. So if I was trading Bitcoin using this chart, ideally, right, for me, I don't have like a strategy for Bitcoin US30 or anything. Like all my strategies are, you can use them in every direction. The thing with Bitcoin is a lot of fake outs, right? And ideally, Bitcoin has been consolidating over the last 2 months or something. So that's the only issue. So for me, yes, I do trade Bitcoin, and the way I trade Bitcoin, I just have a chart that let me put this back. I just have a chart. I think it's this one, forecast right here. So this chart only has the zones. So let me turn that off. Only has the zones and the markups. So this is the only way I trade Bitcoin. So I come here, I put on the zones and the markups indicators, and then I just look for high time frame order blocks that line up with price action. So for example here, and I know I'd mentioned to somebody else, if price closes above this daily bullish low right here, 29,850, that is my indication is for a buy on Bitcoin. My sell, I forgot what my sell was. I think it was 27,850 or something. So for me, I just do zone to zone right here. So I just look for order blocks right here, this daily order blocks, 4 hour, ideally high time frame order blocks. And for me, that is how I trade Bitcoin. If you guys remember, this was my analysis for Bitcoin right here. So Bitcoin still hasn't dropped down drastically. So I still expect this move to happen for Bitcoin, because keep in mind, right, for Bitcoin, if you want to be safe, just use higher time frames. Because if you start trading Bitcoin using 1 hour bias or 30-minute biases, you'll be wicked out. But for me, if I was trading it on this 4 hour on the daily, I still do expect this pattern to play out, because we have weekly and daily order blocks. As much as we have a daily bullish and bearish order block, if you cancel those out, we still remain with a weekly order block. So around 30,000, 31,000 area, that is a critical area for buyers to kick in for Bitcoin. If I was selling Bitcoin, 31,000 or 32,000 is a critical area for sales. So for me, when I trade Bitcoin, I trade zone to zone. So I catch from a 4 hour zone to the next 4 hour zone, or from one daily zone to the next daily zone. So for me, when I trade Bitcoin, I probably trade, get into one big trade and hold it for like 30 days or something. So for me
Oh my
personally,
days.
that's how I trade Bitcoin. If you want to find a strategy that lines up with this, yeah, I'm pretty sure it exists, but I just don't trade Bitcoin like every day.
Yeah, and just one more thing. When it comes to like, like when you do those big reversals on GBP, NZD, those like they're minor pairs, isn't it?
Yes.
The minor, yeah. So when you do those reversals, you just do it from uh the order block. So once it
Mm-mm.
gets to,
No,
say,
no, no,
major,
no. I just literally the reversal indicator. So there's nothing, right? So if you're confused, don't make strategies. So if you're talking about a reversal, because for me, you just mentioned reversal, I would just go to the reversal indicator and that's it.
so for those major, let's just say those major sells you go for, major buys, like those oh yeah, you'd use the reversal, but when you said you look at the uh like let's just say GBP NZD the other day, when you said it goes to the highest point, like let's just say it gets to a major supply zone, you just sell it all the way
Yeah,
because it
I
doesn't
just
move.
sell it. Yeah, is that it? So
Yeah.
if I'm trading zone to zone, yes, that is different from trading a reversal. So I just
Mm.
look at, and it's all about, so for example, if I do GBP and ZD here, it's all about looking how has price moved. So of course, if I'm trading that, I'm not going to use 30-minute order blocks. I'm not going to use 1 hour. I'm going to stick to the 4 hour and above,
Oh yeah.
and that's it.
Yeah.
So even for me right now, I would still be selling GBP and ZD until, and we also, right, it's also price action. If you look here,
Mm.
we have this right here.
Yeah.
So for me to even start buying, so for me, the only time I'll buy GBP and ZD is if it gets to this 4 hour bullish OB. But
Yeah.
until then, I'm still going to keep selling because we have a monthly 4 hour and hourly bearish OBs.
Yeah. So like, these pairs, from what I've seen, like I'm not sure, like from what you've seen, but over the years, like since you've traded this much longer,
Mhm.
like does it like break, like like areas, like the area, like let's just say, how certain pairs like respect a certain area, like gold doesn't do that. US 30, like the pairs that we trade.
Mhm.
But with stuff like GBP, NZD, all these pairs, what do you think of them? How do they move? Do
It's
they?
it's this it's the same thing. So right, when you talk about they don't respect, like for example, if you talk about US 30 doesn't respect areas, like what do you mean?
Like they just like it's constantly moving. Like how can I say like
Okay, like it's more
yeah
trendy. It's
yeah
more
yeah
of a trending. Yeah,
mm,
yeah, right. US 30 is more of a trending, but keep in mind, as much as it's more of a trending, what is it called? Asset, it still moves to an area. So maybe an FX pair might be moving mostly from 4 hour to 4 hour. Maybe US 30, on the other hand, moves from monthly to monthly. So all of them are still going somewhere. So the question will always be, when you backtest, where do you see this going? So for me with GBP and ZD, I've noticed that mostly it moves from 4 hour to 4 hour. So the question then is with US 30, does it move from 4 hour to 4 hour? Does it, maybe it moves from monthly to monthly, right? So
yeah
every asset moves from one area to another. The question is, what areas are those?
yeah.
Yeah.
And when does it happen? That's another thing. Yeah,
Yeah, right.
but
And always keep
yeah
in mind, right, three ways price moves: fundamentals, which can be based off of news; technicals, which is price action; and sentiment, right? What
yeah.
are people feeling in the market, right?
You
So
know
those
yeah.
three things.
This market sentiment, like essentially, what is it? Like I know it was what market makers and what they do, but like when they say look at economic news and stuff like this, like what is it essentially? Like,
So economic news is fundamentals. So that's, you'll get that on Forex Factory. So Forex Factory won't, I mean, there are forums in here to teach you price action, but Forex Factory, if you're looking at news at the events, this is fundamental. That right there is fundamental. Technicals is like order blocks. Order blocks, support and resistance. I'm sorry, price, no. Technical analysis, yes. Technical analysis is like support and resistance, order blocks, indicators. Sentiment is how are
yeah,
people feeling about the market? How is the population feeling about the industry, the government, right? What is the mood of people? So that's, sentiment is emotions, ideally. So those
yeah.
are the three things that, so for example, if you look at what happened in 2020, 2021, when you had GameStop, that was sentiment. That wasn't fundamental, because GameStop
What was
was
that
a
again? Oh,
uh,
GameStop. Oh,
yeah,
yeah.
GameStop, you had all of these pumps. That
Yeah,
wasn't sentiment, that wasn't price action, that wasn't
yeah.
fundamentals, it was sentiment, because people are like, oh, let's show these people, let's eat the rich, so let's mess up with the hedge funds, let's take their money because they're used to taking our money. And then you have all these retail traders that ganged up and squeezed out the hedge funds. So that is a good example of sentiment.
Okay. Yeah. So, and then one more thing is, yeah, this is another thing. You know, like when the war happened, in
Hmm.
20 like last year. So
Hmm.
stuff like that, yeah. What's that? That's fundamentals, isn't it?
Yeah, that's
Yeah.
fundamentals, and can
So
be
now,
sentiment as well.
yeah. So I think like when I went back and I think you saw it. The manipulation that happened that's manipulation, right?
Technically it's fundamental, because when war happens, right, what is, so think of it, anytime a bad thing happens,
Yeah.
the dollar goes down, because dollar is man-made, it's paper,
Yeah.
it's printed,
Yeah. That's right.
right? So where would people put money? And people would put money in something that's natural, something that is limited. So that is gold. So that wasn't manipulation, that was fundamentals.
Yeah. So
Because
yeah. Yeah.
manipulation would have been manipulation. Think of the, so for example, this
Mm,
gold sell we got stopped out of. So
mm,
for me, this is manipulation, because gold for me is still a sell, but
yeah.
they're kicking price up to stop people out before they drop gold. So manipulation in terms of the war would have been gold dropping when gold was supposed to go up. That would have so think of
Oh,
manipulation is the opposite of what is supposed to be happening. So that's what manipulation is.
okay. That's right. And the thing is though, when the war happened, the thing is the move doesn't happen straight away. Like it happened after maybe a week or two. So how, like in that sense, how would we? Of course, we would have to anticipate it's going to happen eventually. But like, how would you? How can I say? How do we react to that
So
sort of?
the
Yeah.
move happened when Russia invaded Ukraine. It wasn't, before then there was Russia is sending its troops to the borders with Ukraine. That's nothing, right? That can be a bluff. So markets are not
Yeah.
going to overreact with that. But when action was taken, when you heard that, okay, Russia has gone into Ukraine, Russia has bombed this, that
Yeah.
is when you take action. But all of these other things, right, is until somebody presses that button that releases a weapon, that's
Yeah.
when you take action. But if you hear that, oh, so and so is just marching to this border, the best you can do is then analyze and say, okay, if this war is actually to happen, where would gold go? So that's how you would analyze. But so long as they're saying, oh, Russian troops are just going to the border, that's nothing, because they can always come to a truce and then Russia recalls its troops. So what you
Okay.
want to be on the lookout for is that decisive factor. So in terms of war, look for that weapon release, right? So you hear Russia bombs Ukraine. That's going to be the trigger for the move.
Oh, I see. So the day
Yeah.
they attack, that's how it happens. That's with any
That's
war,
what,
right?
yeah. That's with any war.
So in the future, let's just say, of course, God forbid it happen, but let's just say it probably will happen again. But let's just say it happens again. In that sense, you have to be like, of course, you'd have to take action. Same, it will be the same thing, basically.
Yep, it would have to be the same thing because again, right, it happened in the past, so it's more likely to happen again.
Oh my Lord. Yeah.
Yeah, yeah.
And
So that's how you'd
mm,
trade, like for example, those events, those catastrophic events.
mm, what else is there? Yeah, so I think with gold, yeah, so like let's just say the day they attacked, but the day they attacked, it's not like the gold went up on that day though. That's the thing. I know
Oh
you
no,
have
it
to
did.
know.
It did.
Yeah, on that day,
Yeah,
they
and keep
invaded.
in mind, right? What do you mean
Mm.
by went up, right? Do you, because there's always, like for example here,
Like it just
if
blasted. Yeah,
you have this candle right here. So you have this candle that moved, for example, this US 30 buy candle on the 15-minute moved 228 to 298, so moved 60 pips. But each of the candles before that were moving like 20 pips. So one candle, just one candle going up does not mean anything, right? Because
yeah,
if for me, I'm trying to catch this buy here, sure, if I caught the buy down here, yes, this spike in the candle, and that's how order blocks happen. Order blocks try to see the candle before the move. So this bullish move actually here, this move was started here. It wasn't started here. So that's the thing with war, right? Because if you mean gold, did gold go up? So the question to you is, when that war happened, what was gold's price action the last week when news of the invasion started?
yeah.
And I'm pretty sure if you go back and backtest that, you'll see that gold had started trending up. It may not have trended up this with the same volatility as when the first weapon was released, but it was trending up.
Mm.
So, right, it's not like gold, and we can, I don't know, let's see what happened, right? When did Russia invade Ukraine? So Thursday, February 24th, 2022. So if we go here on gold,
February 20. When was it? February 14th or February
no, February 2020, February
20
2024th.
or 24th? Yeah, that was it. Oh my God.
So 24th right here. Okay. February 24th. Look at the day. This was right here. No, I'm sorry. This was February 24th, right here, which was that spike right there. Now, yes, it spiked up and gold went up the next couple of days, but it's not like we just heard news of Russia invading Ukraine on the 24th. Before that, there was things happening, right? Russia's
Yeah.
troops were marching towards Ukraine.
Oh
So
yeah.
look at this whole move right here. So it's not like that move just, the spike just happened at once. It's not like gold was all-time lows and it just spiked all the way up. There was, right, build up, which is what I'm talking about. If you measure this candle during that spike, 74, so it was 1,000 pip candle in one day, right? It was higher
No.
than all these other, but these other candles as well, they were going up like 40 pips a day, 20 pips a day. So they were bracing for this move. So when you say it spikes up, right? At, during what time did it spike up? Yes, on the day of invasion, it literally spiked up 1,000 pips. But before that, gold had been steadily rising. So these are smart buyers in the market that were anticipating that this war had a high probability of actually coming to fruition. And so these were the smart buyers that were buying positions slowly by slowly, and then they just banked on this whole move up. So when you say it spiked up, yes, it did spike up on the day of invasion, but before the day of invasion, there was always rumors around about how Russia is sending troops. So, right, it spiked up, yes, but in the grand scheme of things, the actual spike up or move up on gold started here. It didn't start on the day of invasion. It started the days before. That's when gold started going up. Now, in this, let's say on the 24th, instead of invasion, Russia and Ukraine actually came to a deal. You know what would have happened to gold? Gold would have just dipped down, because the threat of war would have been avoided. So that's the importance of knowing. As much as you just have to fight, it's all a game of probabilities. What is the probability that an event is going to happen? So same thing with buys and sells. What's the probability that US 30 gold or EU are going to sell as opposed to buying? And then comes the question, where would your stop loss be? Where would your take profit be? So, right, it's all that probability.
True. Yeah. So yeah. So this is another thing. Like, let's just say on US 30 or gold. Let's just say, like maybe back in 2020, 2021. Let's just say when gold was trading around, was it around 1400 area or 15, 1600, something like that.
Mm-hmm.
Whenever it was trading, but when it was trading around that level, right, or around that area, the thing is, right, I know, like, I've asked this many times, but I just want to see, like, I just want to understand it in the sense that, when like price leaves a certain area, let's just say it leaves the 1800 area, right?
Mm-hmm.
And now we're in the 1900s, and let's just say we trade there for however long it stays. But, like, the thing is, right, what makes it leave the area? I know, like, the news, all these, like, the market sentiment, all this fundamentals moves it. The thing is, what makes it, like, stay within this area for this amount of time? Like, what do you think
It's
keeps it?
literally those three things. That's literally why price moves. So once
That's true.
so those three things: fundamental, technical, and sentiment. So
Yeah.
understand what lies under fundamental. Under fundamental, you have news.
Yeah.
Also think of it this way: every day, so I don't know how often you trade, but at any
Yeah.
given point, there's somebody buying, there's somebody selling.
Yeah. Mm,
So,
that's right.
right, so and on the other hand, when do imbalances happen? Imbalances happen during
Yeah.
periods in the market where you have way more buyers than sellers, and vice versa. So, but
Mm,
the basics of it is those three things: fundamental, technicals, and and sentiment. So
yeah.
it's those three things. It's nothing else. That is literally what makes price move at any
Yeah.
given time.
That's right. And the thing is this, um, like, when you were talking about with the candles, that
Mhm.
the wick, when you say the wick rejection and stuff like this, basically that every candle, like, is saying something. I mean, that is right, but, like, how do you, how can I say, um, when it comes to the wick rejections, this is mainly meant to be looked at the lower time frame, right? I know
No,
the higher time
no,
frame.
no, no.
Yeah.
It's the same thing, right? Whether it's
Yeah.
wick rejections, whether it's so for me, time frame is relative. So
Yeah.
for me, I can look for, and nowadays I look for entries on the 1 hour. So not everybody can trade the 1 hour time frame. If they cannot trade the 1 hour time frame, then they use the 15-minute or the 5 or even the 1 minute, but the
Yeah.
entry is all the same. So the weak
Okay.
rejections, the break and retest, the double breaks, or two candles closed above or below. So I don't have any. All my strategies you can use on any time frame. So I don't have a strategy that says this only use this on the 1 hour or the 4 hour. At the very least, the closest you'll come to that is that I'll tell you, if you're using this indicator on the hourly, put 0 instead of 1, and that is it. But you won't find me saying, okay, on this 1 hour, do this or do right.
Yeah.
The only caveat is, of course, if you're going on higher time frames, for you to, for example, wait for 2 breaks and retests or 2 candle closures above, if you're doing that on the daily time frame, you have to wait for 2 daily candles to go in. 2 daily, so 1 daily candle has 24 1 hour candles. So 2 daily candles have 48 1 hour candles. So right, as the higher you go, the higher you have to adjust the scale or some of these entries. But for the most part, break and retests, right, is just simple. 2 candles, and I normally talk about, right, in every strategy I've said, like if you're doing the 30-minute and above, maybe wait for just 1 candle. If you're waiting for the 15-minute and below, wait for 2 candles. So if you trade the lower time frames, you need more confirmations than somebody who trades 1 hour and above, because the person who trades 1 hour and above,
Yeah.
it might take them so long before they catch the actual move, and the move might have just happened. But the lower the time frame, the lower the time frame, the higher the amount of confluences you need. The higher the time frame, the less the amount of confluences you need.
Oh yeah, that's actually true. So basically, that's when you were saying about scalpers that it's very
Yeah.
stressful.
Yep, it's very
Yeah.
stressful because you can keep getting stopped out and stopped out and
Yeah,
stopped out because you're trading small zones. But for somebody to get stopped out on the hourly,
that's
right,
right. Yeah,
it's right, the trade just has
yeah,
to just go away from. So you can see even this EU trade I'm still in this trade, as much as it came all the way here, but and this is only like a 20 pip stop. So, and keep in mind, like previously I used to go for 50 pip stops, but you can see because this is on the hourly time frame, I survived this move.
yeah,
Right, I'm still surviving, so hopefully I survive. But you can see the importance of, right, the
yeah.
higher the time frame, the lesser the confluences you might need.
That, yeah, that's definitely right. Yeah,
Yeah.
with EU and GU though, like they move a little bit similar, isn't it? But
Yes, well,
apparently,
they move, yeah,
yeah,
for the most part, yeah.
yeah. But from what I've seen and what some guys have been saying, like GU seems to be like a little not easier, but it seems to be like a little easier to trade than EU. I don't know if I'm sure you realized it, right? Like GU, I don't know, it's just more.
Yeah, I mean,
Yeah,
well, EU is the most liquid pair out there. So EU moves
yeah.
more than any other pair, or is the most traded instrument out there.
Yeah, and I'm sure you know. I don't that the strategy. Of course, these strategies that we use are very good, but you know about session high, session low, right?
Yes, yes.
Yeah, 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 yeah. With GU, like it tends to respect like when it comes to when it comes to trading that session high, session low, it tends to it's one of those pairs that respects that. You get what I'm trying to say?
Yeah, I haven't traded session highs and session lows in a minute,
Yeah,
but when I used to trade them, yes, I used to see that. They're definitely right. They're definitely
yeah.
areas that
Of course,
are
you have to.
critical.
Yeah, of course you have to use like your confidence that you're talking about.
Yeah.
Like I tried it on gold and just flopped. Like it doesn't work like on most things. But stuff like GU probably work. But on gold, of course, like you can't do stuff on gold yesterday. Like I'm sure like all the strategies that we use are very good. But session high, session low, yeah, definitely it doesn't work on most pairs.
Yeah,
From
yeah,
what I've seen.
I think it depends on like the instrument or some. I think US 30 works if I remember correctly, but so
Yeah,
right, it's the same thing as I have with for example, how I have the previous daily high, Friday high, Monday high. So it's similar to that.
yeah. Oh yeah, yeah, yeah. That's
Yeah,
true.
yeah, so it's ideally
Yeah.
similar. So of course, the more confluences you can get, the better. And
Mm,
actually, I do see US 30 pumping up. The more
yeah,
confluences you get, the better, to be honest. But yeah, so I used to trade those session highs and session lows. And you're right, they used to work on some instruments, but on other instruments, of course, they did not
yeah,
work as well. Yeah.
they don't really do that well. But yeah, I mean, what's it called? With things like yeah, like other minor pairs. Like I know there's really no need to trade them. I mean, but of course, if you don't really have a trade, I mean, you probably look for other trades. But with minor pairs, I mean,
Mhm.
what other kind of pairs like you trade apart from like
I
gold?
trade odd JPY mostly right now. I just trade odd JPY, odd CAD, and GBP and ZD.
Oh yeah,
So those,
hopefully,
and if you
yeah,
look at odd JPY, it doesn't move as crazy as GJ. But
yeah.
right,
Oh yeah, yeah.
it normally swings nicely. So it moves from like one area, trends in that direction, moves to the other area, trends in that direction. But those
Yeah,
are pretty much the pairs that I trade. And EU. Um,
yeah. EU gold, USD. I mean GJ. I mean, with GJ, I mean it's preferable to trade. Like, do you scalp on that, or do you just go for reversal?
Mostly reversals, but if I do trade GJ anytime in future, I'll just trade it on the daily maybe. For me, I think that's a better entry, but yeah, other
Yeah,
than that, smaller entries on GJ are very tricky.
yeah. Yeah. I've realized that it's actually true. It's actually hard. Yeah, it's actually hard.
Yeah.
Mm, yeah. Uh, and what's it called? What do you see on AUD USD? What have you seen from
Um,
that?
I
Is it
I
up?
don't
Yeah,
I don't trade those. So if you
yeah,
ask me that, I would literally have to put it on here and I would analyze it that way. But the only thing I know, and that's the only thing I trade, is US 30. Everything else I just analyze. So I don't US 30 is the only thing I know. Like if you ask me what happened to US 30 yesterday, but for me, like if you ask me right now, AUD USD, I would just come here and look at what we have. But I don't trade
yeah.
AUD.
Mm.
So
So,
yeah, or AU, whatever. So
so
I can
yeah,
tell there's a daily bullish low right here, but it broke down there. And right now, right, yeah, I don't trade this, so I wouldn't know how it moves.
that's right. Yeah. So, like, I know, like, when it comes to scalping, a lot of people when they scalp, some people, I don't know if you've seen, they use like 5 pip, 10 pip stop losses. Like, what the hell? How do they do that? I
It's
know,
so I mean,
you
this
can't.
works. I mean, this EU trade is a 20 pip stop. It might look big here, but this is the hourly time frame. Yesterday, I won a trade I made money with EU with a 10 pip stop. This one right here. So
You,
it's all about yeah. Yesterday when I sent
yeah,
this, I sent it in Trade Ideas and I made 1% in EU right here. Trade Ideas. I sent this EU trade. I mean, granted, it was times that we do not trade, but this
yeah.
trade has had a 10 pip stop.
All right.
So it's
Yeah,
all about that strategy, right? Finding that
yeah,
strategy that can give you, and the SAR strategy can give you such a tight stop. The issue with a
yeah,
tight stop is if your stop is too tight, you can get wicked out and price goes in your direction. But yesterday, EU, this was literally a 10 pip stop, or I think it was 15 pips or
yeah.
something.
Yeah, that's right. When you get like you get faked out, you just get wicked out, and then it goes in your direction. That's
Right.
the
So
annoying
which is
part.
why I say like even for the SAR, use at least a 30 pip stop. So the key thing is find a
Yeah,
strategy that can give you, yes, a tight stop, which will give you a better risk to reward, and then fight back test and see how big of a stop loss historically would you have needed to avoid most fake outs. And that's what's gonna give you the answer of what stop loss you should use on trades.
yeah, that's definitely true. Especially when you're scalping. That's what I've realized. Like,
Yeah. Yeah.
it's just, yeah, man. But yeah,
All right, man. Anything else?
nah, bro.
All
Anyway,
right,
thank
man.
you. Yeah,
All right, I'll see you tomorrow. I think US 30 is going up if you ask me. But anyway,
yeah.
all right.